Markets continued to lurch between gains and losses. Global equities were mixed at the start of the week. Risk sentiment was somewhat supported by hopes of progress at Russian-Ukrainian talks. At the same time, investors stayed cautious as Russian Foreign Minister Sergei Lavrov highlighted that there was no progress towards a Putin-Zelensky meeting. Market sentiment improved further the following day, with equities rising ahead of more talks between Russia and Ukraine. Also, market players cheered a solid decline in oil prices witnessed on Monday. Brent crude lost 7% amid concerns that China's COVID restrictions will pressure energy demand. As such, the MSCI's broadest index of Asia-Pacific shares outside Japan rose 0.64%, while Japan's Nikkei 225 gained 1.10% after the Bank of Japan offered to buy unlimited government bonds for the first 4 days of this week. Wall Street equities advanced substantially on Tuesday, moving closer to finishing March in positive territory, with Nasdaq leading the way, adding more than 6% so far this month. Investors cheered peace talks between Russia and Ukraine that were described by both sides as constructive. Meanwhile, 2-year U.S. Treasury notes briefly exceeded yields on the 10-year benchmark on Tuesday for the first time since 2019. The so-called yield curve inversion is often considered an indicator of a coming recession. Striking off yields dynamics, the technology-heavy Nasdaq Composite rallied 1.8%, the Dow Jones Industrial Average added 1%, while the S&P 500 rose 1.2%. In Asia, stocks are mostly higher, with Japan's Nikkei 225 bucking the trend to shed 0.8% after fresh data showed that February retail sales declined by 0.8% versus the median market forecast for a 0.3% decrease. Retail sales fell for the first time in 5 months. On the positive side, however, the Shanghai Composite Index rose nearly 2%, while Hong Kong's Hang Seng advanced 1.34%. However, investor optimism started to wane in Europe as the region's stocks closed lower on Wednesday. While Moscow said it has decided to drastically cut back its military activity near Ukraine's capital, doubts have set in over the pledge after the Pentagon warned that the troop movements do not amount to a retreat. As such, the Pan-European Stock 600 fell 0.41%, with retail stocks leading losses. Earlier in the day, German economy minister said that the country will not accept any gas contract breaches by Russia, urging consumers and companies to reduce gas consumption. In the U.S., stocks slid on Wednesday, ending a winning streak for the market as oil prices rallied after Germany warned of potential rationing of natural gas due to disputes with Russia. On the data front, the ADP report showed that private payrolls expanded by 455,000 in March. The figure was roughly in line with expectations, but the lowest monthly total since August 2021. In individual stocks, RH fell over 13% after the company's fourth quarter revenue came in short of expectations. Meanwhile, shares of Apple fell 0.66% after 11 bullish sessions in a row. The S&P 500 fell 0.63%, the Nasdaq Composite lost 1.21%, and the Dow Jones Industrial Average dropped 0.19% to 35,228.81. Following suit, Asian equity markets fell on Thursday amid persisting uncertainty surrounding Ukraine and weak economic data out of China as the Omicron outbreaks in many cities led to lockdowns. The country's official manufacturing PMI fell to 49.5 in March, down from 50.2 in February, coming in below the median forecast of 49.8. As such, the MSCI's broadest index of Asia-Pacific shares outside Japan fell 0.56%, led by a 1.16 drop for Hong Kong's Hang Seng Index, while Shanghai Composite gave up nearly 0.5%. Oil prices fell on Thursday as the United States weighed its largest ever drawdown from its oil reserves. Washington is considering releasing up to 180 million barrels of oil over several months from strategic reserves. As a result, Brent crude gave up 5% to settle around the $105 mark ahead of the opening bell in Europe. Of note, European futures were pointing out higher as Ukraine said that Moscow and Kiev will resume peace talks online on April 1st. The dollar-USD index encountered a barrier around May 2020 highs around 99.40 at the start of the week before turning lower as risk-on tone emerged across the markets. As a result, the greenback extended the retreat to 97.70 on Wednesday, staying under pressure early on Thursday. Now the traders' focus is to shift from the key U.S. jobs data due tomorrow. Should the figures surprise to the downside, the selling pressure surrounding the greenback will intensify ahead of the weekend. That is all for today. Thank you for watching. Please click subscribe to always be in touch with the latest market news.